Good morning to you all. I welcome, or rather we welcome for the 91st edition of Zentax Talks. Today, our expert CA Pavitra will be dealing with GSTR-9 and then related notices that we are getting from the department. See, a department does not bring in the new evasion or anything. So whatever the details that we have given, from that they are going on a fault finding mission. For example, what is already given in GSTR 3B does not match with the GSTR 9. So you pay the tax. So these type of notices are coming. Now the question arises, GSTR 9, it is a form filled by us. So already the GSTR 3B also filed by us only. In that, if there are error, then will it attract any GST liability? So that is the question that has to be seen. In our opinion, those mistakes cannot attract any liability, I would say, if there are proper reasons. If the government had already given, these are all the checkpoints that one has to see when the GSTR 9 is getting filled. Suppose a column is filled, 8A is filled, and then it is different from 2B. So that time, if there is a prompt is coming, so this amount should tally with this figure. This column should tally with the GSTR 3B. So 4A total should tally with this amount. These type of instructions are properly given in GSTR 9. Now these notices would not have come. So the government, instead of educating us, after giving the figure, they are going on a fault finding mission, I would say. So clear guidance and then instructions are required from the point of view of the government. Then only there will not be any mistakes. But GSTR 9 is not a form for making an assessment. On the basis they go on to levy penalty also. Do not worry about it. Do not worry about it. See, the Madras High Court, in the case of JKS Constructions, Madras High Court, in the case of JKS Constructions, has held or allowed the assessee to revise his GSTR 9. So, in that case, the amount was filled instead of lakhs, some 62 lakhs or something, they wrongly filled it up 6 crore 24 lakhs. So, it is a clerical error. On the basis of it, the state tax officer Nagarkovil raised the demand on the amount given in the GSTR 9, that is wrongly filled up figure. So the matter went to the Madras High Court. Madras High Court, the JKS Construction, allowed the assessee to file the GSTR 9 again manually. So you do not take very much seriously, but at the same time, I would request you to give the proper reply for the differences pointed out in the notice. They call it as IIT notice. Only my point is, if they had given that earlier itself, okay, these are all the items that should tally. For example, credit note amount given here should tally with the GSTR 1 already, where you are giving the credit note figures. So these type of cross checks, if they had insisted prior to filing GSTR 9, or if there are clear-cut instructions with regard to that, then these types of mistakes would not have arisen. Now, after that, now they are finding the fault with the assessee, and then levying the penalty is totally unjustified and unwarranted. So this in this webinar, we thought we shall bring it to the knowledge of the entire our audience. What are the precautions to be taken to avoid these type of errors, and then how to give the reply. So in this regard, recently also the GSTR 9 has got many amendments. That will be a topic for another webinar. So the contents of the GSTR 9 has been changed by the third GST rules amendment. So that also has to be taken into account, but that is not part of this present seminar because this is restricted to the notice. In future, we will be having a separate seminar with regard to the changes that had happened in GSTR 9. I wish to bring it to your knowledge. There is a change, or there are changes in GSTR 9. So you have to be very, very careful in filling up the GSTR 9 in the new format only. One just change that I would highlight is with regard to ITC. See, with regard to ITC, you will be aware of the fact 16(4), section 16, subsection 4 allows you to take the ITC up to 30th November. 30th November, we can take the ITC. For example, any ITC omitted for financial year 24-25 can be claimed up to 30th November of 25. So those types are there. So in this regard, whenever there is a notice comes, see, you are taken the ITC more than what is populated in GSTR 2A or 2B. So the ASSI will simply reply. So this ITC, what I have taken in GSTR 3B relates to the previous financial year. So that type of answers will be given, or that type of replies will be given for the notice. So to avoid these type of notices, now the government has introduced one more column in table 6A. Table 6A of 9. One more column is that. What that column says is ITC of preceding financial year. So previously in section table 6A, we used to give the total ITC taken for that year. Now also the total ITC has to be taken. In table, there is another column 6A. You have to refer what is the ITC for the preceding financial year. So from that you have to deduct, and then only you have to take the net ITC for the financial year. That is the recent amendment to the GSTR-9. So other amendments also are coming. So just I wanted to bring it to your knowledge. So whenever you are going to fill and file the GSTR-9 for the financial year 24-25, these amendments have to be considered. This is one of the amendments where you have to separately indicate the ITC for the preceding financial year. For example, for the 24-25, you are taken, so ITC say 5 crores. If that ITC includes any amount for the 23-24, then it has to be separately indicated in GSTR-9. So these are all some of the changes that are coming to GSTR-9. In another session, we will be giving in detail how to fill up GSTR-9 and the 9C. Now, this is with regard to the notices that you are getting now, pointing out the differences between the GSTR-9 and then already filed GSTR-3B or GSTR-1. So, how to deal with these notices? That will be the topic that will be dealt with by our expert member, CA Pavitra. With this small introduction, let me give that mic and then session to Pavitra. Now it is over to Pavitra. Thank you.
Thank you, Paul sir, for giving your valuable inputs. Good morning, all. I once again welcome you all to the 91st session of Zentax Talks. Firstly, I would like to thank you all for giving your continuous support through all our webinar sessions. In this session, today we will discuss about the notices which are now frequently received from the department based for the GSTR-9 return filers. That is, these notices are issued based on the scrutiny of GSTR-9 and 9C filed by the taxpayers. So in this session, we will see how these notices were issued and what are the practical ways through which we can tackle these notices. So let's start the session. First, we will see what are all the GST notice proceedings which are there. The pre-SEN proceedings were scrutiny of returns, audit, inspection, search, test purchase, inspection during movement of goods. Then the pre-SEN proceedings can also be conducted for unregistered persons. Thereafter, the SEN related proceedings will start. In that, the intimation of liability in DRC 01A. That is the pre-SEN proceedings will be issued. Thereafter, it will be followed by the summary of show cause notice in DRC 01. There's a technical issue. Please wait for 1 minute. Apologies for the interruption. There was a technical error. So now we will start the webinar. The SEN related proceedings, that is the intimation of liability in DRC 1A will be issued. Thereafter, it will be followed by summary of SEN in DRC 01. So this for this notice, we need to reply in form DRC 06. Thereafter, the proper officer will assess our submissions and he will issue order in DRC 07. So this is the GST notice proceedings. If at all there is a determination of tax not paid or ITC wrongly availed or utilized, then the proper officer will issue notice under section 73 or 74 read with rules 142 of CGST rules. That is, the officer will issue DRC 01A, that is intimation of tax ascertained as being payable issued based on rule 142 subsection 1A. However, this DRC 01A is not mandatory. If this notice is received, then the taxpayer should reply in part B of DRC 01A. Thereafter, the show cause notice will be issued. The summary of show cause notice will be issued at least 3 months under section 73 or 6 months under 74 prior to the time limit of issuance of order as provided in section 73 subsection 10 or section 74 subsection 10. To this notice, the taxpayer should reply in form DRC 06. So this to reply in show cause notice, a reasonable time of at least 30 days will be provided by the proper officer. So how to find this notice? Once this notice will be received in the online portal. So once we log in the portal, in the services under user services, we will be able to see view additional notices or orders. So in that, the show cause notices will be issued to us. We can also submit the reply online in the same same SEN way, in the same place where the SEN is received. Thereafter, we can find the order also in the view additional notices or orders option. Now we will see the GSTR-9 and 9C applicability. So the GSTR-9 annual return is to be filed by every registered person other than input service distributor, casual taxable person, and non-resident taxable person whose aggregate turnover during the financial year exceeds 2 crores. So if a person's turnover exceeds 2 crores, then they need to file GST. In case of GSTR-9C, the aggregate turnover limit is 5 crores. In case that exceeds 5 crore, they need to file GSTR-9C. The common issues which are dealt in the notices, that is, as we see, the notices are issued for GSTR-9 filers. So the majority, we have listed the major common issues which were given in the notices. So the issue related to output taxes were short paid of tax on taxable GSTR-9, short payment of tax under reverse charge mechanism, difference in tax payment on reconciliation with GSTR-9 and 9C. Now we will see the common issues which were given in the notice, which are related to inputs. So the first issue is excess claim of ITC on comparing GSTR-3B. Thereafter, that is non-reversal of ITC for exempted supplies on non-business transaction. Then claim of ineligible ITC under section 17(5). Then the scrutiny of ITC reversals. That is, the department compares the ITC reversals reported in GSTR-3B and GSTR-9. Then another issue is interest on late reporting of invoices. Then GSTR-1 late fees. And one more issue which is frequently issued in these notices is ITC claimed from cancelled dealers, return defaulters, and tax non-payers. So in the future slides, we will see the issues one by one and how to tackle these issues. First, we will see the under declaration of tax payable as per returns, which is related to output tax. So we have given a sample notice which is given. So in this, they have mentioned that there is a short payment of tax on taxable supplies reported in GSTR-9. So in this notice, they have taken tax on taxable supplies as declared in GSTR-9. That is, they have taken this amount of tax payable, that is output tax payable, from table 4N of GSTR-9, and they have compared it with the total tax paid through cash and through adjustment of ITC in GSTR-3B. That is, they have compared this tax payable with the tax already paid by cash or by utilizing ITC in GSTR-3B. And if there is any discrepancy, they have given us net tax payable. So if there is any difference in the tax payable and tax already paid, then this amount has to be paid by way of DRC-03 at the time of annual return. If a taxable person has failed to pay such amount, then this issue arises in the notices. One more issue, which is common issue in this notice, is that short payment of tax under RCM. That is, in this scenario, the department has compared RCM liabilities which was reflected in GSTR-2A. That is, for the whole financial year, they have taken the GSTR-2A for which the supplier has mentioned it as reverse charge document in 2A. So that figure is compared with the RCM liability declared in GSTR-9. And thereafter, they have also compared the RCM liability which is declared in GSTR-3B. So if there is any difference in this liability for which they have to pay as, then that amount is given as a difference as tax payable under RCM. So we have to ensure that we have paid RCM on the supplies which have received. Also, we have to cross-verify it with the GSTR-2A. If at all we have missed any input which were reflected in 2A, then we need to pay such amount. In case if we have missed to pay this amount earlier, then tax along with interest has to be paid at the time of SCN. Moving on to next issue, that is difference in tax payment in reconciliation with GSTR-9 and GSTR-9C. So here the notice has compared the total amount to be paid which was declared, that is the output tax which has to be paid declared in GSTR-9C, and they have compared it with GSTR-9, that is table 9Q, that is total amount paid as declared in annual return. So these two amounts were compared and they have given us unreconciled payment of amount. So this, if at all any unreconciled payment is there, then we have to give reason for such difference. If the reason is justifiable, then the department will accept the issue. If it is not, then this amount will be shall be liable to be paid. So we need to check why such differences arises in the notices, and we have to give the reason with proper documentary evidences. So these are all the issues related to output tax. Now recently we have seen many GSTR-9C filers have received notices in Form ASMT 10, where the department have asked various clarifications and documentary evidences to be submitted. So the major issues they have quoted is the exempted supplies reported in the GST returns. That is this, for example, this is a notice we have taken. In this, the taxpayer has declared the exempted supplies in table 8 of GSTR-1 and table 3.1 of GSTR-3B. That is, they have declared the exempted supplies in GSTR-1 and GSTR-3B. However, they have not declared the exempted supplies in 9 and 9C. So the department has asked for this difference, and they have also asked to produce the documentary evidences and also the nature of this exempted supplies. So if at all we received this notice, then we need to explain the nature of the exempted sales made by us. We need to give sample invoice copies If we have made any exempted purchases, then we need to give that sample purchase copies and also the ledger copies of the total exempted sales made during the year. Another common issue which is given in a very recent notices are related to credit notes. So the department have based on the credit notes declared in GSTR-9, they have asked for clarification. Also, they have asked for documentary evidences to be submitted related to credit notes. So if we have received any notice for this issue, then we need to give the details of credit notes issued during the year, and we have to give the details of any previous year credit notes issued in the current year, then sample copies of credit notes issued along with the reasons for issue of credit notes. If we have issued any financial credit notes, then that need to be submitted. Then we have to give a proper justification as to why these credit notes were issued. In case our customer has returned the goods or they have raised delivery challan, so those documents has to be submitted to confirm that return of goods. Moving on, next we will see the issues in the notices related to inputs. The major issue is the excess claim of ITC. So in this, the department has compared excess claim of ITC in GSTR-3B and GSTR-9. As we all know, GSTR-9 cannot be revised. We need to take proper steps in reporting the inputs as well as the outputs in GSTR-9. So this case is an example where the taxpayer has missed to declare the sum of category-wise ITC breakup in table 6 of GSTR-9. This is only a reporting error. However, this leads to tax demand, and in the notice it has been given as excess ITC claimed. So the reporting the figures in GSTR-9 should be very careful, and we need to report the correct figures. So in this, the total ITC availed in GSTR-3B is being compared with category-wise ITC breakup provided in table 6. However, there is one discrepancy in this notice. That is, during the reconciliation of ITC, the department has compared total ITC available as per table 6A of GSTR-9 with ITC classified in table 6B to 6H of GSTR-9. However, this amount does not consider the department does not consider the ITC reversal reported either in table 7 of GSTR-9 or table 4B of GSTR-3B. In case if we had made any reversals, then we need to give the reply with proper justification that we have made these reversals in GSTR-9 as well as in 3B. So the compared figures has not, we need to mention that the compared figures have not considered the reversals made during the year. Moving on to next issue. In this issue, the excess claim of ITC is compared with excess claim of ITC in GSTR-3B is compared to the tax declared by the suppliers based on the GSTR-2A. So 2A and 3B is compared in this scenario. So as Paul sir has mentioned, if at all any previous year ITC is claimed by us in the current year, then we need to give the details of the invoices for which we have missed to claim in the previous year. Also, we have to confirm that we have claimed within the statutory time limit provided to claim such ITC. Section 16 of the CGST Act has provided the eligibility and conditions for taking the input tax credit. In this, it is given every registered person shall, subject to such conditions and restrictions as may be prescribed and in the manner specified in section 49, be entitled to take credit of input tax credit charged on any supply of goods or services or both to him, which are used or intended to be used in the course or furtherance of his business, and the said amount shall be credited to the electronic credit ledger of such person. Here, an important point to note in this section is that the ITC can be claimed when it is used or intended to be used in the course or furtherance of business of the taxpayer. So this point need to be considered very carefully. Next, section 16, subsection 2 provides the conditions for availing ITC. In this, the important point is that the possession of tax invoice. So this possession of tax invoice can be in a soft copy or in a hard copy. For suppliers with turnover above 5 crores, invoice must be generated through e-invoice portal. Otherwise, it will not be considered as a valid tax invoice. Moving on next, another issue which we dealt is the ITC to be reversed on non-business transactions and exempted supplies. This is one important area where many people miss to do the reversals. That is, many people were unaware that they need to reverse the ITC for the exempted supplies. So this is one area where major demands were raised. The reversal of ITC is provided in section 17, subsection 2 of the CGST Act, where they have mentioned that where the goods or services are used partly for effecting taxable supplies, including zero rated, and partly for exempt or non-business use, then the amount of credit as attributable to exempted supplies or non-business use shall be reversed as per Rule 42 or 43 of the CGST rules. That is, section 72 has mentioned that if a goods or services are used partly for taxable supplies and partly for exempted supplies, then the credit which are attributable to such exempted supplies shall be reversed in accordance with Rule 42 or 43 of the CGST rules. However, there are certain exceptions where this reversal is not required. So we have listed 2 practical examples where this ITC reversal is not required. That is in case of sale of duty credit scripts or MEIS licenses, or in case the exempted supplies were interest received from banks and financial institutions. Then in such cases, the reversal of ITC is not required. So we have to prove to the department that the sale that is the exempted supplies were the MEIS licenses. For that, we can give the copies of invoice copies of the MEIS licenses. If it is bank interest, then we can submit the interest receipts, if any, received from banks. We can also submit our Form 26AS. Also, we can give the audited financial statements that these exempted were related to the exempt for which exempted supplies for which reversal is not required. Moving on next, scrutiny of ITC availed under imports. That is, the department has considered ITC availed on import of goods, including supplies from SEZ reported in table 6E of GSTR-9, and they have compared it with import of goods from overseas on bill of entry and inward supplies of goods received from SEZ units or developers on bill of entry as per table 10 and 11 of GSTR-2A. That is, for the ITC claimed on imports, they have compared GSTR-2A and the ITC availed through GSTR-9. So this is on a practical issue where the invoices, all the invoices were not fully reflected in GSTR-2A. That is, the bill of entry were not fully reflected in GSTR-2A. So in such scenario, we can submit the copies of the bill of entries based on which we have claimed such ITC. So we can also verify those bill of entries were reflected in IceGate portal or not. Then we can give a list of ITC claimed which based on the bill of entries. Then the copies of the bill of entries may be submitted. If any bill of entries which related to previous year is claimed in the current year, we need to prove to the officer that we have not claimed that ITC in the previous year and we are only claiming such ITC in the current financial year. Moving on, this is one important issue which is faced by many taxpayers. That is the claim of ineligible ITC. So the department, based on the HSN code, and the return submitted by the suppliers, they have identified certain goods, certain HSN codes as ineligible, and they have given notices as these were ineligible ITC. So we have listed some major goods which were considered as ineligible in practical scenario. They were insurance and pension services, rental services of transport vehicles with or without operators, outdoor catering, construction services, motor vehicles, sanitary goods, taps, electrical goods, paints, machinery and repair services of transport machinery and equipment, iron and steel, tiles, sanitary goods, taps, plywoods. So these are all the common examples which were identified by the department. So in this scenario, we need to determine whether we have used these inputs for the purpose of our business, and whether these inputs were blocked under section 17 subsection 5 or not. So now we will see section 17 subsection 5 in a very detailed manner. If the input which was claimed by us is covered under blocked credits, then we need to reverse such ITC. Otherwise, we can claim the ITC. Section 17 subsection 5A deals with motor vehicles for transportation of passengers. The ITC on motor vehicles for transportation of passengers having approved seating capacity less than or equal to 13%, including driver, is blocked. However, when such motor vehicle is used for making further supply of such motor vehicles, example for car dealers, then if such motor vehicle is used for transportation of passengers, then ITC is allowed. If such motor vehicles is used for training on drivers such vehicles, for example driving schools, then in those three scenarios alone, this credit is allowed. So let us see in a practical example. If a company buys a 5-seater car for its director's use, then ITC is not available. Let us say, for example, Ola buys a car to provide transport services, then in such scenarios, ITC is available. So the ITC on vessels and aircraft, this ITC is blocked. However, if it is used for making further supply or used for passenger transport, for any training or transportation of goods, then this ITC is allowed. Next is the services related to motor vehicle, vessels or aircraft. That is the input tax credit on service of general insurance, servicing, repairs and maintenance of motor vehicles, vessels and aircrafts are blocked. Let us say, for example, vehicles which are covered in section 17(5) subsection A or blocked the credits. So related to such vehicle, any insurance or any maintenance, if we have claimed inputs, then such inputs were also blocked. Such inputs is allowed only if the recipient is engaged in manufacture of such vehicles or in supply of general insurance services in respect of such vehicles. Let us take an example. If a company pays for insurance of a director's car, then the ITC is blocked. If a car dealer insures his stock cars, then the ITC is allowed. Next is section 17(5) subsection B, food, beverage, outdoor catering, health and beauty services. So the ITC on goods or services for food and beverage, outdoor catering, beauty treatment, health service, cosmetic surgery, then leasing or renting of motor vehicle, vessels, aircraft were blocked. However, it is allowed when the inward supply is used for making outward supply of the same category. Let us say, for example, ITC on lunch for directors is blocked. The ITC on catering services provided by a caterer, then in that case, it is allowed. Next is membership of clubs, health and fitness center. The ITC is blocked on membership fees for clubs, health and fitness center. Let us say example, gym membership paid for company's directors, then ITC is blocked. If example for a golf club membership is paid for entertaining the clients, then in such scenarios also ITC is blocked. Next, travel benefit to employees. ITC on travel benefits extended to employees on vacation such as leave or home travel concession is blocked. That is, the company reimburses employees for holiday packages. In such cases, the ITC is blocked. Section 17(5) subsection C deals with works contract services. This is an important area, that is the ITC on works contract services for construction of immovable property other than plant and machinery, except when such input is used for further supply of works contract services, then it is blocked. Let us say for practical example, ITC on contractor services for office building construction is blocked. However, if a works contractor is outsourcing a part of his project to subcontractor, then in such scenarios, ITC is allowed. Next is the most important topic, that is section 17(5) subsection D, goods or services for construction of immovable property. The input tax credit on goods or services received for construction of immovable property other than plant and machinery on own account, even if it is used for business, is blocked. So, through Finance Bill 2025, the wordings plant or machinery is substituted with plant and machinery to nullify the effect of safari retreat case, as we are aware of it. The ITC on cement, steel used for constructing office buildings is blocked, even though if it is used for office purposes or for construction of building is blocked under this section. For the purpose of clause C and clause D, the construction includes reconstruction, renovation, additions or alterations or repairs to the extent of capitalization to the said immovable property. However, this term capitalization is not defined in GST law. This explanation simply uses the phrase to the extent of capitalization for the purpose of restricting the availment of credit. Also, the expression plant and machinery means apparatus, equipment and machinery fixed to earth by foundation or structural support that are used for making outward supply of goods or services or both, and include such foundation and structural supports. However, this plant and machinery has excludes land, building or any civil structures, telecom towers, pipeline lights outside the factory premises. Section 17(5) subsection E blocks the ITC on goods or services received from a composition dealer. If we have made any non-taxable, that is the ITC is claimed on goods used for personal consumption, then the ITC is blocked. Next, if the input tax credit is not available, if the goods are lost, stolen, destroyed, written off, or disposed of by gift or free samples, if the ITC is paid under fraud cases, that is due to demand confirmed under section 17(4) or detention and seizure of goods or confiscation of goods, then in such cases the ITC is blocked. Moving on, now we will see another issue, which is a very important issue, and that is the ITC claimed from cancelled dealers, return defaulters, and tax non-payers. This is one scenario where we are unaware whether the supplier has filed the returns or they have cancelled their registration or what. This cannot be identified by the taxpayer. However, the department will provide us the list of suppliers from whom we have taken ITC if they have cancelled their registration or if they have defaulted in in paying the tax. So in this, this is one practical example where we can see the supplier registration cancelled before the date of invoice. In this case, the supplier had failed to file GSTR-3B and did not pay tax on the invoices declared in GSTR-1. That is, the supplier has filed GSTR-1 and they have then such invoices reflecting in our GSTR-2A. However, they have failed to file GSTR-3B, or the supplier has filed the GSTR-3B, but they have filed as nil turnover. So in these cases, we have to prove to the department that such supplier has paid the tax. We need to give documentary evidences. If we can track the supplier, we need to get those evidences from them, and we need to submit it to the department. Otherwise, it will be in violation of section 16(2) subsection C. That is, the tax has not been paid to the government. So that demand will be liable to be payable by us. As we have seen from this notices, the reporting in GSTR-9 should be done in a very careful manner. So we will now see how to ensure proper reporting at the time of filing annual returns. Contents of form GSTR-9, the part 2 and part 2 deals with details of outward and inward supplies, that is table 4 and 5. The table 4 we have to report details of advances, inward and outward supplies made during the financial year on which tax is payable. Table 5 we have to mention the details of outward supplies made during the financial year on which tax is not payable. So the part 3 contains the details of ITC. The table 6 contains the details of ITC availed. The table 7 contains the details of ITC reversed and ineligible ITC. Table 8 contains other ITC related information. In part 4, the details of tax paid will be shown. In part 5, the transactions of previous year shown in current financial year will be shown. In part 6, the particulars of demands and refunds will be shown. This part 6, that is table 15 to 19, is optional except table 17. The critical points which we need to consider while reporting in table 4 and table 5 is that the IGST, CGST and SGST reflected in table 5N will be cross-verified with our liabilities declared in GSTR-3B, which is the output tax. So we need to carefully consider that we have reflected the correct figures in table 5N, and that amount should be reconcile with the liabilities declared in GSTR-3B. In case if there is any deficit payment in GSTR-3B, then such amount shall be paid by way of DRC-03 with interest. If we have missed paying such amount in GSTR-9, then notice will be issued to us by the department considering these defects. As we have seen earlier, the point related to reversal, the reversal shown in table 7C, 7D and 7E of GSTR-9 will be compared with table 4B1 of GSTR-3B. That is, the ITC reversal in GSTR-3B and ITC reversals shown in GSTR-9 will be compared. If there is any notice, then if there is any difference, then we will receive notice in that. So at the time of filing GSTR-9, we have to ensure the figures were properly reported and they reconciles with our data in based on our monthly returns. If at all we have missed reporting any reversal or we have missed to pay any output tax in our monthly returns, then we can pay such amount by way of DRC-03 at the time of filing annual returns. So if we have made these if we have declared these amounts correctly in GSTR-9, then we need not fear the notices received now. We can simply give a reply that we have already reconciled the differences, then we have already paid. If there is any discrepancies, we have already paid these amounts. Another critical point which required consideration in table 8 is that the difference reflected in Table 8 will be treated as ITC availed in excess of GSTR-2B. So in such cases, the department will consider Table 8F and Table 7E will be compared, and if there is any negative difference reflected in Table 8A, it means that the import ITC is availed more than the import IGST paid. Then in such cases also the notice will arise. So we have to ensure all these figures were tallied and there is no discrepancies at the time of filing annual return. So ensuring proper filing of annual return will help us in giving a proper reply to the notices. So we need to consider all these points while filing our annual returns. In our upcoming webinars, we will discuss about these reporting in annual returns also. We are at the end of the session. So please follow us in our WhatsApp channel. So you can scan the QR code there. We are providing daily updates of us Zentax Info Bytes. So you can get our various case laws and latest improvements in GST through your WhatsApp. So please scan this channel. If you have any queries, please put in the chat box. Our senior partner, Paul Tangam sir, will reply to your queries.
There is a request, a gentle request I would tell. That is, may you conduct the meeting using language Tamil. Yeah, actually, we were conducting the meeting earlier in Tamil only. But we found some of the persons are nearly many persons, even higher officials from other states are participating. So if we talk in Tamil, they will not be able to understand. That is the reason we changed. So that is the reason for conducting the webinar in English, sir. Because even some of the assistant commissioners from other states, they are also regular participants in our webinar. They too say it is our webinar, it is very knowledgeable. So they take part in the department officials also. So we have to take care of their need also. For that only we are conducting in English. So this is for your kind information, sir. Madam, please share your PPT. Yeah, that will be sent Mayappan. Department notice issues, excess ITC, GST. See, just you have to, that is a wrong approach, I would say. They take the entire ITC because reversal will be there. 4B1 and then 4B2 reversals will be there. So that has to be considered. So there is a provision for taking the consolidated GST at 3B. In that you will find that reversals. So you bring it to the knowledge. So you are taking only the total ITC. That reversal also has to be considered. So when you consider that, the ITC taken by us will be lesser. So that type of reply has to be given. See, actually, the commissioner, even a commissioner or the tribunal, they do not have any power to condone the delay in filing the appeal. So normal period is there, then additional condonation period is 30 days. So after that, they do not have any inherent power. See, they cannot exercise the power which is not available to them. The statute, the law in its wisdom has provided for additional 30 days condonation period to the appeal commissioner or the JC appeal state commissioner. So beyond the date, they cannot condone. But within that period, 30 days also, they can condone if there is any sufficient reasons. So you have to prove there are sufficient reasons to condone the delay, and then you have to file a condonation application. If it is also after the date, then you have got no other alternative except to approach the High Court to get a writ order to directing the commissioner to or the commissioner appeals to get the appeal admitted. There is no other alternative. See, does the exempt supply for which ITC reversal is not right, does it include? See, what is the income received by the proprietor in his personal capacity? Suppose he is getting a gift in his personal capacity. That is not a supply at all. There is no supply at all because it is not without a consideration he is going to get. But for the purpose of accounting, you have made an entry in that P&L as a gift from so and so, gift from father. There need not be any reversal because that gift itself is not a supply. Where we can see the supplier got cancelled there.
Sir, we can see whether the supplier got cancelled in the GST portal. There is an option as search taxpayer. So if you have given the GST number there, you can find whether the person is active or if they got registration cancelled. You can find it in the portal, sir.
We have received notice for RCM, which you have made outward service transaction. Should we pay the amount? No, there is no need for paying again out double time. So this is what happens. Instead of showing it as an RCM, you might have shown it as a other item, other supply. So you can say this is other item that has been included. Then you need not pay again. One trader dealing in all taxable goods, but now due to rate changes, some goods went 0%. Till now, utilizing 100% ITC going forward, want to utilize common ITC, does it proportionate ITC? See, actually, if the product has become exempt, naturally you have to reverse the ITC relating to the inputs that you are holding in stock. It has to be related only to the product that are getting exempt. So it is not for all the thing. So what is the exempt? You have to reverse. Even the common ITC also has to be reversed. And then even capital goods, if it is within a period of 5 years, that also ITC has to be reversed. If it is used for manufacturing the exempt item, due to rate revision, if it has become exempt, so the reversal of capital items also will come. GST APL 0 orders not on common portal. Any alternative that you have to go and then that's not related to the topic. What is the case law name for ITC taken in 3B?
CA Venkatachalapati, sir. Sir, please mail this query to our mail ID, sir. We will search for the case law and get back to you, sir.
Supplier failed to file GSTR 3B and did not pay on the invoices declared in the having paid the entire amount to the supplier. How to overcome this case? See, if it is a huge amount, then you can ask the concerned dealer, concerned officer. See, suppose you are getting goods from Chennai Circle, okay, Chennai Circle, and then if you will be from the portal, you will be knowing who is the person or under whose jurisdiction that the dealer comes into, has got his jurisdiction. So you can direct that officer to issue a notice to the concerned party. Then you can attach the proof, because once the tax collected, they cannot retain it. Once the amount is collected as a tax, it is a duty on them to remit it to the government. When he has not filed and 3B, that means he is holding your tax. So you can ask the officer to record that amount from that person, giving the details. This is the invoice. He has put it in GSTR-1. So I am getting it 3B. I am getting it in 3B. I'm not getting in GSTR 2B. So in that reason, you can say he has not filed. You will be getting in 2B, but he has not filed GSTR 3B. So the amount has not been paid to the government. So for that purpose, you can ask the officer to recover the amount from him. But that's not relevant to this case. Thank you. Thanks, one and all, for your overwhelming participation. Your participation only keeps us motivated for finding the new topics every week and then to bring it to the knowledge of the all our esteemed participants. Thank you, one and all. Thank you.